Good to know. Hey, greetings. Happy Thursday, traders, before a long Memorial Day weekend. And I am Samantha LeDuc, founder of LeDucTrading.com, joined by Denise Shull of ReThink Group. I couldn't be more delighted. I was just sharing with her that I have had many trading friends who have said they have devoured her work and followed her, and some have even used her services, and it has helped unlock a lot of their potential. So I couldn't be more happy. And I want to have her on this show, which is basically my webinar interview, also podcast. So a little housekeeping first and foremost. This is my Women in Trading and Finance series, and then it will be housed on my YouTube station, which is Leduc Trading. It is also down here on a playlist. It is also going to be a podcast, which is going to be found on Apple, Spotify, and Audible. So I encourage you to have a listen, and then definitely thumbs up, comments, all of that good jazz. But let me just do a little bio for her. I think this definitely merits a more detailed bio, because I think of her as trading psychologist to the stars because the traders that she has helped are, make impactful, big, money-making decisions. Also athletes, keynote speaker at conferences and the like. But she's really performance, peak performance coach and strategy decision advisor. So we're very fortunate to have her share some of her methodology and maybe some stories, and maybe give a little bit of insight also on why there are not as many women in trading and finance, which is one of the reasons why I do this series, is because I really want to draw attention to the wonderful voices of women and how to elevate, inspire, attract, support, level up the playing field for women in trading and finance. So thank you, Denise, so much for joining. And just to give a little background, you have definitely been, on Wall Street for quite a long time. I would say 1994 is impressive track record. And even I'm a late bloomer. When you probably, those who got on the email list know that she comes from electronic trading firms, first in Chicago, then trading at Schoenfeld Securities, before she was recruited to move to New York to run her own desk at Sharp Capital. The Shull method, which we're going to talk about, and we'll chat about all kinds of things, based on modern psychoanalysis and the science of anticipatory effect. It's also in her 2012 book, Market Mind Games, a radical psychology of investing, trading, and risk, which I would say is very sophisticated. And it has been reviewed as one of the best of its genre and a veritable Rosetta Stone of trading psychology. So without further ado, thank you, Denise, so much for joining.
Oh, thanks for having me. Are you kidding? Happy to be here.
So I first saw you on, Real Vision when they launched, and I was very excited to kind of hear your approach to trader psychology, because I don't do trader psychology with my clients.
Mm,
To me, I find it to be a very personal experience. Um,
mm,
and, part of that is just, I guess, privacy, kind of farm girl,
hmm.
farm girl quiet. Like I just want to do it myself and figure it out myself. And then,
Right.
and people who are looking for advice, I'm like, honestly, I'm at first, this is such a personal experience, and to spend the time that you do with traders to find out, and their blockages.
Hmm.
It's your passion. You have, from I guess a while now, found that you want to solve this puzzle,
Yeah.
and my puzzle is the market edge. What's the market edge? It's always changing. That to me is
Right.
a puzzle. So what has kind of driven your curiosity in this space, because it has motivated you for a number of years?
Yeah. Yeah. It's sort of funny. I was talking to someone else about this just the other day. And in some ways, the guy that got me into trading, who had been a floor trader for a long time, and who admittedly I dated for some period of time, but then we became really good friends. And I can't even remember. I guess when I started trading, we were friends at that point. But he had told me these stories of, like making millions of dollars on the floor, even in the 90s, 80s, and 90s. And then like one afternoon losing $500,000. And I was like, what? Like, how could that happen? And so, in some ways, I've just been trying to answer that question, really.
Okay.
How do people who are competent in the market do, like, out of the blue, and I'm using air quotes, insane things and lose bunches of money?
So have you figured it out?
I have. Um, and the weird thing is, I figured it out sort of roundabout. So while I was trading, I used to read Reminiscences of a Stock
Yes.
Operator and all the Market Wizards books. And
Yep.
I can even remember sometimes going home on Friday night in Chicago, even though I was like 32 and single, and opening my own bottle of Chardonnay and reading Market Wizards because I was just so fascinated by it all. But then actually it was this like indirect thing where the small institute of modern psychoanalysis wanted to publish my master's thesis because it was neuropsychoanalysis, brain science and psychoanalysis. And I was like, you can't do that. You're going to look like idiots. It's 10 years old, but I'll update it because it'll be really fun to be published in an academic journal. And then Antonio Damasio showed you had to have emotion to make a decision. And I was like, wait, what? Like, what? How can that be? It's always take the emotion out of it, control the emotion. And if you did that, you couldn't make a decision. I was like, huh. And I was literally having this conversation with a trader at Starbucks near the then World Trade Center in Chicago. Like, I'm like, wait, like, how do we square this up? And he's like, you've got to write an article about this and I was like, who's going to publish an article by me? But anyway, fast forward, that article got published and people started to call and wanted coaching. And I was in psychoanalytic training. So I asked the psychoanalyst if they would help me, help these clients who were coaching. And really soon into it, I got this client who lost money every morning. It can make it back in the afternoon. And like, he was successful. He was on the floor of the Board of Trade. He would basically lose like $8,000 to $10,000 every morning, come back, be break even, and then make $8,000 to $10,000 late in the afternoon. He's like, this is crazy. And I'm like, yep, this is crazy. Similar, different crazy than my friend, but crazy. And so just because I said, well, tell me your life story. And he proceeds to tell me about being born to, a teenage mother who was on welfare and having nothing, and then being, virtually adopted by the track coach in grade school, and then becoming a really fast runner, almost making the Olympics, getting a scholarship to college. And I'm like, I don't know, sort of sounds like your life story. Like, get yourself, you're way behind the 8 ball, get even, do well. And he was like, oh my God.
But I know traders like that who have made and lost millions, and I do mean rags to riches, where they're multimillionaires and then it's all gone. And then they do it again. Oh my God, they do it again and then it's all gone. But it's over years, not hours.
Well, I had a consult with someone yesterday who is actually coming to my workshop. And so I do these individual consults with him. And we were sort of like that. Like, he's done really well. But he had a day a couple of weeks ago where he just totally blew it, and lost a whole month in an afternoon. Now, at this point, I can often ask just a handful of questions and see what's going on. Basically, the human brain predicts based on our past experience, and particularly predicts feelings. So it, like in this trader's experience, the one I talked to, I think it was yesterday, I said, okay, so I know when someone fights the trend, which is what he was doing, in a 1 day trend, whatever, markets falling, buying. I know that most of the time they're trying to prove they're smart to somebody, because you have this feeling like while you're doing it, oh, I can see the turn, like I'm such a genius, I can see it. And then you buy the falling knife, and then it falls a little bit further, and you're like, oh damn, and then you got to buy it more, but like, I'm sure I'm right. and they dig in on being right, which is what my original friend did. Why? Because in both cases, and this is the case for everybody, but in both of these cases, they had very critical, very know-it-all fathers that you can imagine they never got any respect from.
Okay. So validation is missing.
Yeah. And then they're trying to prove themselves worthy by being the genius who finds the turd.
So do you think that there are, I hear this all the time, and I hate to put people in categories, but the ones who have fear of missing out because they are afraid of being wrong, versus, just that money, that's just all about the money. Do you simplify? It's never all about the money.
It's layered. So I always think of it in a pyramid, and there's like the superficial, well, I don't want to lose the money and I do want to make the money. And then, but under that is, well, I'll feel smart if I do and stupid if I don't. And under that is, well, if I feel stupid, do I seem stupid? Will I be embarrassed to those who know I make the money or not? Even if no one will know, but you imagine, somebody would know. And then there's then there's always a layer underneath that. Like, why does it matter? I will ask someone, and then what? And oftentimes they have a hard time answering. But okay, you miss out. Then what happens? Well, I'm going to feel stupid. Okay, so you feel stupid. So
or
then
perceived as stupid. That's even
well, yeah. Well, that's usually kind of, if I think, to the extent that there are sort of general layers, it tends to go feel stupid, seen as stupid. Those tend to be kind of two different layers. Like, I feel stupid is one thing. You think I'm stupid is a whole nother thing, right? And so it tends to be layered. And usually if you have one, you have the other. I mean, not always, but and this kind of stuff, by the way, and it's important to say that, is like a fingerprint. So, it sounds all similar, right? Person to person, but any one person's version of it is like their fingerprint. It's slightly different than the next person's version of it.
So you talk about that in your book a lot, and the fractals repetitively playing out our emotions. Explain that, please.
Well, so
is that like the fingerprint?
Well, sort of. So, I mean, basically, psychoanalysis has said for 100 and some years that we learn kind of patterns growing up, and then we have a tendency to repeat them. And that happens like kind of around our self-image, by the way. Like, we expect to be treated a certain way, in a situation with a person of authority or power, and then we react a certain way, and then we create the same circumstance. So psychoanalysis has said that since the days of Freud. At the same time, fractal patterns exist in nature, right? Like, broccoli is a fractal. Like, the little tiny stalk of broccoli is basically the same as the whole head, just a different size or scale, is to use their words. Well, when I was writing my book, I started thinking, like, wait a minute. We learn these kind of emotional scenarios. When I wrote my book, I might not have called them that, but when we're a kid, about who we are and where we belong and then we play them out in adulthood. Well, that's the same as like the little stalk of broccoli and the whole head of broccoli. So I really do think our psyches are fractal, and that we have some pattern that repeats itself at different scale. Now, as it turns out, in the decade now since I wrote my book, the neuroscience has really shown that we're always predicting, based on past experience, and always predicting how we're going to feel. And it is indeed based on our past experience. So that's how the fractal evolves, right? I think there's somebody else in the world who said psyches are fractal, but I'm not really quite sure anyone else has, but it seems obvious to me.
So the recognition of loss versus wins in the trading world, what do we hold on to much more powerfully? Like, how does...
Well, generally, people take losses as much more critical than they take wins as complementary.
So they take it personally?
Yeah, I mean,
How do you fix
generally.
that?
Well, you get people to talk about what the real feelings are about. Honestly, there's a, you know, in a culture of positive thinking, and granted now the idea of toxic positivity is finally coming forward, but I mean, for the better part of the past 15 years, you weren't really allowed to say you're afraid or you're frustrated or you're disappointed because it's going to make things worse. Never mind that most of us were trained not to say those things. But the truth is, if you can admit what you're really feeling and why you're really feeling it and understand it, you usually can put more of the past in the past and be more in the present. And if a trader is able to be more in the present, it's easier for them to understand that, look, I'm only going to win 40, 50, 60% of the time. It's better than baseball, but it's similar. I'm not going to hit the ball. And like baseball players don't worry about not hitting the ball 70% of the time. And if they're hitting the ball 30% of the time, they're killing it.
Yeah.
I mean, yeah, I'm sure none of those hitters like it, but they know if they're hitting it 30% of the time, they're like superstars.
And it's very similar. Trading is a performance sport.
Totally. It's physical, mental, emotional. Your physical energy matters. If you're tired, you will misperceive risk, usually not to your benefit. You'll underappreciate the risk when you're tired. So you'll do stupid things. It will seem like, oh, this isn't that big a deal. I'll just take this trade. And maybe you don't lose very much, but use a little and then you're annoyed. And then you'll take another trade to just make it back. And then you don't make it back, of course, then you're really annoyed. Then this all started just because you were fatigued and didn't really appreciate the risk in the first trade.
Do traders think in terms of the risk? In other words, I have, very few like truisms in trading. And my number one is don't risk more than you're willing to lose.
Well, that's for sure.
But that's not necessarily I don't find that to be a common thought. There are some really outsized bets or not expecting it to go against, and that's when the mistakes can compound. So I've been told that's too conservative a belief, right? You can't get wherever there is without making really swing for the fence kind of things. So for me, that's just a truism in life. Don't risk more than you're willing to lose in life or in trading. And if that's farm girl, I don't care. That's really comfortable for me. But I don't find that that's common.
Well, it's actually very logical, and it relates to what a professional portfolio manager would call asymmetric risk. I mean, maybe your odds are 1 in 5, that you would lose a lot. But the lot is everything. Well, okay, if it's only 20% odds, statistics might say you should take it. But the downside to losing everything is too much, so you can't. So, like if the risk is death, you can't take it. It doesn't matter that the odds are low. And people don't appreciate that.
I think I'm probably referencing more individuals who start their own business or have their own trading book, not necessarily those with a compliance manager or officer on their shoulders. So there's
right.
a little bit different regards. Do you have, your client base, do you have individual traders that come in versus shops, that say, I want you to work with these traders because their book isn't as strong? Like what's your primary?
Well, at this point in time, most, if not all of my clients are professional money managers, my personal clients. My company, though, and I have 2 former clients who coach for me now.
Oh, wonderful.
We definitely have individual traders. And, over the however many 16 years I've been doing this, I've coached a lot of people that are just, running their own book with their own money.
Yeah.
Whether that's 20 grand or 50 grand or 200 grand or whatever.
Yeah.
And I mean, I certainly come from that world. Like, I mean, while I traded at firms, I traded my own money for, I don't know how many years, but a fair number of years.
Oh, interesting. Okay.
So I know, I mean, I certainly have an appreciation what it's like to be an individual with a trading account, staring at a screen and making your own, processes and managing yourself, as opposed to being in a company. Although I will tell you this, just as we said something about stories, some of my clients have, like, I have one guy who spun out his own fund out of a famous fund like 5 years ago and has a team of like 18 people, which obviously includes a couple of risk people. And they tap him on the shoulder, but it doesn't actually matter very much. It's like, leave me alone. It pretty much does what he wants, which a lot of the time works out, but not all of the time.
Well, that's why folks do it oftentimes on their own. Restriction is not their jam. It definitely is not mine. So there's
mine neither.
So all right. So this method, the Shull method, walk through it a little bit. How does it work? Because you have to really kind of get to the kernel of the corn pretty quickly with traders. They have an attention span typically not very long that I find, but I would think this takes some work to really unearth the fears and the disappointments and such. How does this work?
Well, it is again, it's totally dependent on the person. But I mean, the basics are, we know that our clients are having emotions, and oftentimes emotions they don't realize they're having. And we know they are predicting future emotions, and they're basically completely unaware of that. So we think in terms of how do we help them become aware? But we respond to the level of willingness. So if someone's really willing, we just go there. And, frankly, most of my clients are just going to go there. But we work with the person's resistances because we know from modern psychoanalysis that it doesn't help to just try to bust down someone's resistance, because it's actually there for a reason. Like, it was developed as a defense mechanism and there was good logic for it. But in short, we are trying to lead people to be able to answer, what am I feeling and why, with no editing and no judgment, and be accurate, the real reason. And then teach them to leverage their desire, which is like sort of opposite of Buddhist philosophy. Like, what do you really want? And okay, now that we know, what would it take to get that? Because people don't actually answer that question. They're too afraid to answer it really.
Do you mean, like, I love to ask, if money was no object, what would you do? Mm-hmm. It kind of frees that requirement sometimes, or that limitation. Mm-hmm. I would say the limitation more often than not. Kind of. So do you have to? Is that easy for most? I mean, do you just their first response is typically the right one, or you have to?
I was being interviewed for a podcast last night, and it's not in the training room. And the interviewer asked me to help coach him through a decision he has to make. And I basically said that, okay, like, if money's not the issue, what would you do? Then it was hard for him to answer. Like, he had, yeah, which, a way of putting that, you're oftentimes trying to get the person to really actually recognize their intuition or kind of their true voice. But it's so obscured by our tendency to analyze, our education and analysis. I mean, I have another client, runs a hedge fund, has been thinking about merging with a bigger hedge fund. And this is maybe 2 weeks ago. He's literally going through all the reasons that he should do this. the other fund has 10 times more capital, and they'll give him his own book, and he can bring his team, and he'll get the payout. But I can tell in his tone of voice that he didn't want to do it. But every word out of his mouth were all the reasons he should do it. And I gave him the weekend homework of like, okay, you got to figure out. I'm telling you, you don't want to do it because I can hear it. You're telling me all the reasons why it's a great idea, but I feel, which is nothing we use in the Shull method. We use the feelings we get from the person as pieces of information. Mm-hmm. So he was giving me this feeling that he was rationalizing. So anyway, I gave him the weekend homework of, okay, figure out why you don't want to do it. And he came back with, on Monday, I don't trust that guy. And I'm like, okay, you're going to close your fund or merge your fund into his, but you don't really trust him. I'm thinking that's a bad idea. Call me crazy.
No, okay. So that's the decision tree. And when you have traders that are, basing too much on intuition and not analysis, what's the opposite?
I don't know if I ever have that.
Really? Okay. I would, that's interesting. Okay. No.
I mean, first of all, the professionals all have some process, right? Like some lens, some kind of camera they learn to view the market through. I will tell you though, like the job with them, if I just had to say what's a one sentence job, it is getting them to listen to their intuition. Because what is intuition? If it's really intuition, it's expertise that's gone from cognitive linear knowledge in your head to pattern recognition in your body.
Oh my God, I like that definition.
That's what it really is.
I like that definition.
Some academics will call it visceral intelligence, but that's what it is. It's expertise that's become physical. Yeah. It's calm. It has, a sense of recognition. But it started out as something you had to learn to do step by step by step.
The only parallel I have is no matter what's going on it personally or even in the market, when I go into my live trading room, it's very calm for me. Like everything else kind of shuts down, and right. I could be sick. I can still analyze. It's just in the patterns that it's the most powerful thing. And then when I close it, I can go. The zone is gone. It's kind of that flow, if you will. I get into it. It's really, really comfortable. I don't realize I'm just rote memorization or muscle memory, whatever it is. That's interesting. Okay.
Well, I mean, the parallel in athletics is the thing they tell professional athletes all the time is don't think. Just do the thing you know how to do. Well, what is that? I mean, that's the knowledge of how to do it is in their body. When they first learned to throw a baseball or catch a football or snowboard, they had to think.
So then the negative side that you're trying, emotions or feelings that, we experience, especially in being wrong, losing money as a trader, as an investor, as a money manager, trying to unearth kind of the source of that and the puzzle to have them actually figure it out so they can fix it. Is there, and I know it's a personal experience, you kind of like maybe push that discovery process, but is there, I don't know, a shortcut? Like, well, if folks are really in that negative space and they're feeding that, how do you get them to stop doing that so they can clear it and identify what's wrong? Because that negative space can be, self-fulfilling.
Yeah, but there's this magic of getting the negative correct. And what I mean by that is back to the question of what am I feeling and why? Like if you go down that, I miss out, and then how do I feel? And then I feel stupid. Okay, then what happens? Then how do I feel? And you get to the real true bottom feeling. It's oftentimes freeing and empowering, ironically. it's a little hard to do. For one, that people just don't have the tolerance for feeling bad. But so the skill to allow yourself to feel bad and just be researching what the heck is this really about? Because when you get to the really, you often go, oh, okay, either that's, just because my older brother beat the crap out of me all the time and that doesn't apply, or, oh, okay, that is something I could fix. Like when you get to the actual true why for you, this happens almost every day in my coaching. It's like it snaps you back into the present in a certain sort of way. You kind of see it for what it's worth, and whatever amount of historical fuel it's got, you put that in its place in a way. But it requires like following the rabbit hole of why do I feel bad and what's the worst that can happen. All these things that pop psychology will tell you not to do. It's hard to do. None of your friends will support you in doing it because they don't want to hear it and they just want you to feel better. And sometimes it takes time. So you have to allow yourself to feel crappy.
I like the Munger quote. 90% of people don't care about your problems, and 10% are really glad you're having them, or something like that.
Yeah, right. Most people don't care. Yeah, right. That's true. I think I had one this week. I'm trying to think. But I mean, it happens all the time where I lead people through this to the real why of whatever the feeling stupid or disappointed or embarrassed and then they go, oh, I didn't even realize it was really that. And just that much, like exposing the real thing. Because remember, your brain is predicting based on past experience, and it's particularly predicting a feeling. But you don't know it. When you do know it, you go, oh, is that really true or not? Or, okay, most of that is from this past experience. Or, oh, I could do this differently this next time, and then it would turn out differently.
So you don't really care what their process is mechanically, or I should say, technically for trading. The results they care about, and when they suffer, they seek you out, or higher performance because of bigger challenges. So do you really just are very concerned with their feelings? I mean, you're not getting into the weeds with any particular style of trading approach, that kind of thing. So how big a role does confidence play? Do you size it up? Cockiness, confidence, that fine line?
Yeah, it plays a huge role. Now, the truth is, one can perform well when they're not confident. That is possible, but only if they understand that they can use their fear or frustration to help them. But, generally speaking, feeling optimistic, which is a variation on confidence, is important. Believing that if you do X, Y, and Z, you'll get the thing you want, believing it will work. But what most people don't realize is they have conflicts around those beliefs. Like, do I really believe that this strategy for the market works? Well, I sort of believe it. I know this person who makes money doing it this way, but am I really sure? Do I really believe they make money? Do I think it will work for me? I spend a fair amount of time, even with my professionals, uncovering conflicts they don't know they have. They think this and they think that, and those two things are in conflict as to what it'll mean to the market. And so I'll try to help them just, if nothing else, just realize, wait a minute, you have two completely, conflictual trains of thought here. And then you wonder why you can't get big in the position, or you can't hold on to the position. Well, you're not completely confident, or to use the hedge fund world, convicted. Hedge fund word.
So then that leads to a question. Talk of the difference between risk and uncertainty.
Well, that academic definition is that risk is what you have when you roll the dice. There are only a certain number of outcomes. There's only a certain number of outcomes in chess. Poker is uncertain. There's all the cards, and then there's how will the people play the cards, and there's no black and white, way for how people will play the cards. So risk is definable, like mathematically, 1 out of 6 or whatever the dice is. Uncertainty is when you can't actually calculate the real odds because there's people involved doing things, changing the situation. No matter how many times you roll, 2 die, there's still going to be X number of combinations. No matter how many times you play chess, even as complicated as it is, there's still a limited number. Like a computer can do every chess move there is, right? We can't do it. But when you play poker, the cards mean something, but the cards don't win. It's the human reaction to the cards.
So I have for me anyway, I don't play poker, but I do count cards, meaning if they're 3 out of 5 or better, the probabilities are better for the trade. If they align, like if I have 5 as a criteria, I want to see at least 3 out of 5, and then I have higher conviction. So that might be the way that I minimize uncertainty, but I'm not, uncertain more than 60%. But okay, so this defined risk versus, counting cards, for lack of a better term, that's, what folks are doing maybe intuitively without a real decision tree. Are you trying to give them a decision tree and definition to kind of weigh so they're better at it?
I never try to give them an actual decision tree. I talk them through it. But, client to client to client, right? They have completely different processes and completely different things they look at in the market in completely different ways. I have long, short equity in the hedge fund world, meaning, you can be long X amount of dollars and short X amount of dollars. I have long, short equity that's market neutral, which meaning those are supposed to offset each other. I have global macro guys who focus on currencies. I have global macro guys who kind of focus on commodities. I have emerging markets where they only invest in stocks in Egypt and other crazy countries. And they all have their own. There's a million different ways to make money in the market.
And the trick is not to lose it.
Well, number 1 trick is not to lose it. Number 2 trick is to figure out a way that makes sense to you. And the way you do that is learn it from somebody who has credibility and makes sense to you. But in the end, it's got to be like your sport. You've got to understand, the market's like surfing, sailing, baseball, whatever. Like you need I tell people, sit down on a Saturday afternoon and write out what the heck are the markets and what makes them move.
But like in general, but specifically, the narrative changes or the edge, I like to say, moves. So constantly trying to find the edge in the market means it's always moving. That's actually what thrills me about it. That's my passion is to find the moving edge. That's the challenge.
Well, that's okay, so you're a surfer and the waves and the water and the wind and the weather's switching up. When you're finding out, what's driving what right now that you got to jump on your board.
Or are they even good conditions to surf, period?
Well, exactly.
Yeah.
Exactly. Yeah. But all I'm saying is individual traders have a tendency to think, there is some magic bullet. And if there is, it's understanding the market in your own words, and then understanding yourself and marrying the two.
Love that. Know thyself. Keep trying to figure out the market. But yeah, but putting it in your own words, perception is reality. That's where you're going to follow with your trades. Absolutely. So you mentioned, you kept saying I have macro guys. I have long short hedge fund guys. I have, Forex guys, where are the women? Like, where?
Oh gosh.
No, we have to talk about this because this is one of the things that irritates me. And I mean, you want to ask me, what am I angry about? Early on was, I wanted to see what I could be and couldn't find very many women doing it. And when I was looking for mentors early on, and I would fly wherever, and just kind of like overlook, shadow a mentor just to see how it all worked. Now it's definitely changing, but very slow, as you know, in the industry, and it's very,
Very.
very slow in the industry. And I know that you've talked about, there's, I don't know how you feel about this, but I want to ask, where are the women in finance and trading?
Majoring in psychology. Um, and that's the true answer. I'll tell you what, like, honestly, high school and college, like, very few teenage girls think or know, are informed that, like, the markets are really about predicting people. Granted, using numbers,
Mm-hmm.
but that it's a human social game, not unlike psychology. So they think it's just like, you got to take financial analysis and that's boring. And they, want to take more sociology and psychology and art and whatnot. And they don't realize, like, that is what the markets are. So,
Absolutely.
but guys are fine taking financial analysis, you know? So one of my all-time great stories along this line is I have this client who's had a hedge fund for his all adult life. He's got 6 children. I think there's a couple left in their teens, but most of them are in their early 20s. So he's been around for a while. And a few years ago, he's like, my daughter's a freshman at Columbia and she doesn't know what she wants to major in. She's thinking about psychology, blah, blah. Will you talk to her? Now, this is his oldest daughter. So at that time. So I talked to her and I'm asking her what she's interested in. And she's like interested in analysis and logic and people. And I'm like, have you ever thought about doing what your dad does? She's like, no. I'm like, why not? She's like, never, ever occurred to me. I'm like, I think, because she somehow was thinking the only thing she could major in was psychology, but she didn't really want to, if I remember that's the circumstance. And so it was like, help her figure it out. And the more she talked, I'm like, she should be a hedge fund manager. And lo and behold, I didn't work with him for a couple, 3 years. And then he came back just recently, like in the last year. And he was talking about a trade they did last summer. And he's like, yeah, my daughter helped me figure it out. I was like,
Oh, I love it.
yeah, I was like, you see me like grasping.
I can't believe you're disarmed with your
it drives me crazy. Like, even me. My father was a buy and hold stock investor who told me when I was 9 years old that he owned part of AT&T, and I was so completely intrigued by that. Like, and I tried to get him to give me $100 to invest, but whatever. I mean, if I had known that I could like major in finance and learn to analyze companies, which is really just predicting people. Yes, you have to do a model of like, what are their cash flows going to be? And then like buy the stocks, but I was really about predicting their behavior and predicting how I would have like been all over it. I would have gone the path and maybe have my own hedge fund now, but I didn't know. I didn't even know when I was trading. Honestly, I didn't know like the path into being a junior analyst at Goldman or wherever, and then getting a job as an analyst in a hedge fund, and then moving up and then having your own book.
Yeah.
So they just don't. The biggest problem is they literally don't know.
100%.
If they do know, it's misconstrued as a math thing.
So I'm self-taught. And early on, I thought the same thing, that this was a math thing. And I'm an options trader. And I'm like, really, it's not math. So that was exciting to finally overcome that obstacle. And
Mhm.
this thing that we have in common about restriction is, not our jam. I could study anything. I do the macro, the intermarket, the technical, the fundamental, the quant, the I don't care what, the sentiment. But it was all, for me, very freeing eventually to just figure out that, oh my God, I'm really good at this. I don't have to have this traditional path. Thank God there are actually, non-traditional paths now in finance, which is,
Right.
you know, but I same exact thing. Like if I had known, I'm 53. Well, yeah, I just turned 53. So if I had known, had no idea that this would be my thing. This would be so incredibly my passion, like my children. Like this was my thing. So because I just didn't think I didn't see anyone that was. I didn't have the career path, the mentoring, the knowledge. Forget STEM. At least now STEM is becoming, more
Right.
popular for young women. And there are some egalitarian men, and definitely the Gen Z and the millennials. Oh my gosh, they see much more of their partner as a partner. And then, of course, a lot of these companies that are having, grown adult, female children who are seen now as more competent and passing the baton. And
Mhm.
I think there's much more opportunity in the future, but it's still been very frustrating. And I just was, I've voiced that frustration sometimes on Twitter, and it has gotten me immediately blocked. Oh my gosh, talked over, belittled, et cetera, et cetera. And then I decided, okay, listen, I still have to talk about this. I still have
Yeah.
to figure out this puzzle and connect with women who also, feel this. Sally of
Project.
yes, Krawcheck what is it,
Relevance.
Elevate has gone out there, and there are others. I'm excited for that path, but it is still very slow to launch.
Well,
And
here's the crazy thing. There's a fair amount of research that show that women are better portfolio managers.
when you talk about intuition, you're helping these men to unlock their their fear and their disappointments and get in touch with their feelings. Women are intuitive by nature. We're very I think also natural teachers. There are some just kind of god-given abilities that are natural. uh, I don't know, foundation is there.
Well, the brain research and other research shows that the more you're predicting other people and the more you know yourself, the better you manage money
Oh
on a
my god,
profession.
that's
Yeah.
okay.
Well, women tend to be naturally better at both of those things.
But we're also not very empathetic with ourselves. We're very hard on ourselves. And I hate to categorize, but we are. I mean, it's just, we're tough, on our feeling of self worth. And this is not
Well,
easy to overcome culturally.
the world is tough. I mean, the nicest thing you can say is women have to dance backwards in high heels, and that's the nicest thing.
Well, I was interested in, in your take. Oh, hi, Stella. Sorry.
Hi, Stella.
This
Oh,
is
Stella, you're very
She does
pretty.
she does this near 5 o'clock. That's actually my alarm that gives me a heads up that time's almost up because she wants to get fed. So what do you suggest? What do we do about this? Like this is um, your life's work, working predominantly with men in finance and trading. Uh, how to, I guess, kind of elevate this space just by being you. That's awesome. But I mean, how do we get them to be more cognizant of the need to bring them up, bring women up, let that
Well,
voice
I
of
really do think that young women, high school and college aged women, really need educated that running a portfolio could be great fun. Never mind, you could make a bunch of money.
yeah,
Um,
and to contribute this the team, the caregiving, the taking care of. We're also good at that.
yeah, yeah. Well, and so, in a sense, supporting companies you believe in by buying their stock. So, I mean, I have a client who's a portfolio manager in one of those gargantuan, like over $1 trillion firms. And he was telling me today, like he was actually lamenting the difficulty with keeping female analysts
That.
because they've sort of, he said he had two in the past 5 years who kind of ended up not wanting to run their own book because they kind of didn't think they were doing the world enough good. And he's frustrated with that. You know, it's hard to find a good female analyst to begin with, and then you find one and they're really good, and then they don't want to stay because they don't see a purposeful future. And I think that's a little bit of a misunderstanding of what it means to run a book and what you can do if you run a book. I mean, the impact that you can actually have on the world, you know, just if by nothing else, virtue of the money you make that you can, you know, then spread around. But you also can invest in the companies you believe in, like, which is a positive. Maybe you're an ant in the anthill of investing in the companies you believe in, but it's still something, and it's the way it works, right? Like, so I just think that young women kind of don't get it oftentimes. Now, there is plenty of chauvinism and all of that. And the same client was telling me about a young woman who works for him who he thinks is fabulous and like the most brilliant analyst he's ever had. But until she came to work for him, she had bad performance ratings within the firm. And it made no sense. She came out of Goldman, so she got this great training. And we actually had a conversation about maybe some other guy she worked for just, you know, couldn't cope with such a smart young female and gave her bad performance ratings. And now she's, you know, she's got that. So there are a couple of women in finance on Twitter who are really trying to, you know, push, but
the voice of women is still relatively it isn't relatively, it's very small, and those, regardless whether loud or soft, I have this, you know, running mantra that there is no meritocracy without the voice of women. So there needs to be that representation in financial decision making, not just in the home, not just in a book of a hedge fund book, on corporate boards. So this is just kind of interesting because the whole concept of getting somewhere, myself included, is all by my lonesome. Like that's how it feels, and I hate for women to feel that way. And then I see the she session that's happened in the past year because of COVID. Right, childcare is definitely not equally distributed, and production is valued much more than reproduction in American culture. So this has been a tough thing to kind of balance. Administratively, we might have a change, but long story short, there's just been a huge impact on women's wealth, especially in the past year. And the numbers of women who have opened trading accounts is greater than men in the past year, which also makes me worried because they're new to the business, and they, that whole Bitcoin and the liquidity driving this market, and then all of a sudden they're like, everything starts to chop around and volatility comes in, and any new trader, male or female, is getting handed their head in some of this volatility. So I worry about the women out there who are new to this space, but I'm also excited because they're taking the steps to close that gap. It's not just income gap, it's wealth inequality is much, much bigger. So,
well, there's no reason that an independent female trading her own account can't do as well as any man. And generally, there's probably reason to believe they can do better over time. Women tend to be a little bit less driven by fear of missing out. So if nothing else, they tend to get a little less involved in stupid stuff for the wrong reasons. To be very general, but.
No, but I wanted to ask that. What are some of the characteristics of, a woman analyst or trader, specifically trader, because obviously that's kind of my focus, that good or bad, But in regards to general characteristics, I know your data set isn't so large just because the
It's
nature of,
not. Yeah, it's
yeah.
not.
And but yeah, share and how to overcome some of that stuff, because I think the encouragement is not to give up, but
Well,
that's
the
kind of lame.
rap is that, women won't take the risk. But that's also sort of the benefit. Like that's probably somewhat true, is they generally tend not to take the gargantuan risks. But they also don't take the stupid risks as much. You know, they want to know, they want to have a rationale, and they're pretty good at sticking to their rationales. Um, and they generally tend not to get swayed as much. Um, it does remind me when I was at that first electronic trading group, the guy who ran it, his name was Bob Cantor, called me in one day and he said, "You have the best instincts I've ever seen, but I don't think a woman can trade." I'm like, Bob, I mean, I was like, Bob, what is the point of this conversation? Is that a compliment? Or like, how should what are you trying
Backhanded
to
one.
say? What are you trying to say here? Like, why am I here? And I guess he was trying to illustrate that I really did have the best instincts, because he didn't think I was even possible. Like, that was what ultimately came out of that. And then he told me, by the way, but I was too conservative. That's what he was trying to tell me.
Okay.
I didn't. So I like went back to my desk, and the next day he called me and he was like, "Buy 10,000 shares of Kmart." I'm like, "What?" He said, "Just buy 10,000 shares of Kmart." I said, "I don't have enough money in my account." He said, "I own the firm. Buy 10,000 shares of Kmart." I was like, "Okay." He said, "Buy another." I was like, he was trying to shock me into taking a big risk. Kmart was falling out of the sky that morning. This is 1995 or so. It was opened at 6 and it was trading at 4.5. So this is like,
You remember. Okay.
anyway, I don't know. I didn't make money on it. We didn't make money. I lost money. It was his trade, but whatever. But I just said that to illustrate. Best instincts, didn't think I could trade, thought I should take more risk. I didn't really want to take the risk, but the boss is telling me to do it. Like, I thought it was a bad idea.
But that brings up another point of, there are times where I have let others get inside my head, and after the fact I regretted it. And it wasn't just that it was a man, it was just that I let anybody get inside my head. But you didn't have
What
a
do
choice.
I really think? That's the question. Like, what do I really think? What do I really believe? What is my conviction about? What is my intuition about? Find that voice, that's in your right below your rib cage, and prioritize that voice over. And if you can't find it, then figure out what you have to do to find it. I'm not speaking to you. I'm speaking to people listening.
Yeah, yeah. No, and this is why I wanted to ask, because I don't want to just assume that, and that men who have this illustrious career have privilege, and privilege is invisible to those who have it. So they have the privilege. They don't realize it's a turf. They can protect, um, because they already have the turf. So I understand that there is a change, but it's for the better. And I still keep going to that part where it's short term selfish, to protect that turf, but it's long term, beneficial. The economy will grow. It's just the meritocracy of decision making will grow to have that voice of women. But it does seem like a very kind of small chamber of folks that believe or want to hear it. It's just kind of, let's just do the job. So doing the job right now, you are sharing your pearls and your insights in your consulting biz. You did a book, what, 2012? Are you going to do another one? Will there be some research on women traders?
Well, there may be. I have a book in the works, but I find it's so hard for me to find time to work on it, and then I get distracted with other projects. I actually now even have a writer to help me, but it's just I will have another one, but I wouldn't hold my breath.
Well, you have to be inspired, and like you said, it's got to feel right. So, well, I'm looking forward to that. Let's just say, whenever you do a podcast, I listen, and I know other traders who do, because you always inspire and try to connect the dots. I mean, obviously, this is your talent of kind of synthesizing lots of different feelings and emotions and trying to make sense of it when we're just too close or too oblivious whatever. You do a great job of that. So I
Oh,
really
thanks.
appreciate this share because, like I said, I have been told via DM and email, this is such a catch. So thank you so much, Denise. I really appreciate it.
Thanks for having me.
Where can folks find you? And if they want some help, what are the resources that you provide through ReThink?
Yeah, so it's the rethinkgroup.net. There's a blog on there that I wrote for years. I haven't written much in the past few years, but it's got archives way back when, tons of interviews. I mean, we are doing a workshop here in Sun Valley that I think there's only 1 or 2 spots left. So that's, but I think there are 1 or 2 spots left. Twitter. I mean, if you compile all of my tweets, there's like a whole book in there. I mean, you can leave out the tweets about diet and the tweets about billions, but like, there is a whole book in there.
Awesome. All right. Yeah. That's your brand. This is true, and I follow you on all those platforms. So I appreciate the free advice too that you give out. And thank you very much again for taking time out. Good luck with your workshop and your next book.
Thank you.
And thank you for helping to level up the playing field for women in trading and finance. I really appreciate that.
Likewise.
All right. Thank you all.
Thanks for having me.
Have
a good Memorial Day.
Have a great Memorial Day weekend.
Bye.
Cheers. Bye-bye.